Why you should buy life insurance. Covering expenses indirectly attributable to the policyholder's death. No one can blame you for the financial strain caused by your premature death. But you can't ignore it either. Your life insurance coverage calculation must therefore include expenses that wouldn't burden your spouse if you were still alive. Such expenses often arise from the loss of the deceased's labor and the corresponding increase in demand on the surviving partner's time. Child care for younger children so your spouse can continue to work full-time or increase their hours worked. Part-time child care for school-age children so your spouse can work productively. Home cleaning and maintenance services, such as landscaping, you or your spouse would previously have done personally. Health insurance for your spouse and children if they previously had coverage through your employer and your spouse's employer doesn't offer adequate coverage. The total amount of life insurance needed to cover indirect expenses resulting from your death depends on what expenses you expect to incur and for how long. For example, if you die when your kids are ages 1 and 3, you need about 2 years of full-time child care for the older one and 4 years for the younger one before they begin attending elementary school during the day. At $15,000 to $25,000 per child per year, that's anywhere from $90,000 to $150,000 over 4 years. Get a quote and visit www.epinia.net.